I'm here in San Antonio for REITs REITwise, our 2019 Law, Accounting, and Finance Conference. Joining me today is Dave Levy, partner with Skadden ARPS. Dave, thanks so much for joining us.
Thanks for having me. Appreciate it.
Now, here at REITwise, you moderated a session on REITs and opportunity zones. What opportunity, pardon the pun, do you see for REITs in this area?
Well, there's really two that we've seen so far. So for the REITs that NAREIT represents, the larger public REITs, some of them are using the opportunity zone regime as a source of long-term capital for development projects. There are times when private investors looking to make opportunity zone investments can offer better terms either economically or governance-wise than the terms being offered by the larger players, the pension funds and the sovereign wealth funds. The second thing we're seeing is that there are some REITs who want to sell properties and reposition their portfolios, and there are situations where like-kind exchanges do not work for one reason or another. It can be a little difficult to use a like-kind exchange structure in a long-term development project, for example. And those are situations where the public REITs are thinking about making opportunity zone investments on their own.
And what are the biggest potential drawbacks for REITs or their shareholders as they're looking at these opportunity zones?
Well, really, for REIT shareholders in REITs that are looking to be investors in opportunity zones, the real issue is the ability of the REIT to pass through opportunity zone tax benefits to their own shareholders. So the way the regime works, if a investor sells an asset at a gain, the investor can take cash and contribute cash into an opportunity zone investment. The idea there is that on the gain that was recognized, the investor gets deferral and reduction in the recognized gain, and if the investment's held for 10 years, the investor gets a complete tax exemption. Now, a REIT can take advantage of those two benefits, but when it comes time to distribute the cash to its own shareholders, there's a very real possibility that those shareholders will recognize gain in connection with the distribution. So until that issue is resolved one way or the other, you might see REITs being a little more circumspect on the benefits of the regime.
And picking up on that a little bit, what are the biggest remaining open issues in terms of implementing the opportunity zone provisions?
Well, for the REIT industry, one of the biggest issues really involves the working capital safe harbor. Generally speaking, when you put cash into an opportunity zone investment, there are very strict rules around how quickly that cash must be deployed. So right now, the way the safe harbor works, and everybody likes to play within the safe harbor, you have 31 months to turn your cash into a rental producing asset if you want to stay within the safe harbor and avoid penalties or potential disqualification. And for some of the longer development projects, that can be a real challenge. You have things like entitlement, zoning, and just the general issues that come up in construction. For folks in the Southeast, you might be unable to build for a month and a half around hurricane season. For folks on the West Coast, the entitlement process may take longer. For folks in the in the Northeast, it could be labor issues and things like that can slow the process down. And so, until there are some more clear rules about how to think about unanticipated delays, in construction, you might see REITs really confining themselves to smaller projects that can go up more quickly. I mean, think low-rise office buildings and non-phased developments, things like that. So that's pretty much the governor now. There's some hope that in the next round of regulations, the Treasury might loosen up on those requirements a little bit and make some of the phased development, larger, transformative projects more of a possibility with the regime.
Great. Dave, thank you so much for joining us.
Thank you for having me.
For more information on this and other REIT news and analysis, be sure to visit NAREIT's website, REIT.com.